Forex trading looks simple on social media, but many beginners lose so much money because they don't understand the basics. So, in this video, I'll break down Forex trading step by step for beginners. I'll talk about what Forex is all about, how the market works, the tools you need, how to start trading, and the mistakes you must avoid if you want to succeed. So if you are new to Forex, watch this video till the end because it will help you a lot. Now let's start with the first thing we are going to talk about, which is what is Forex. We have been hearing Forex here, Forex there, FX here, FX there. So what is actually the meaning of this Forex? Forex or FX is just an acronym, it's just an abbreviation which means foreign exchange. So what is actually the real meaning of this foreign exchange? So Forex simply means a market where currencies are bought and sold. So that is the simple meaning of Forex. Now let me give you a simple example of what foreign exchange is all about. So take for instance, you travel from a country like Nigeria to the US. You need US currency to do your daily transactions. So once you change your Nigerian currency to the US currency, you have participated in Forex. That is the simple example of foreign exchange. So now, how are these currencies traded? So these currencies are traded in pairs, that is in twos. You cannot trade one currency alone. So take for instance, we have Euro USD, we have GBP USD. GBP USD stands for Great Britain pounds against the United States dollar. Then we have USD JPY, that is United States dollar against the Japanese yen, and so on and so forth. There are many currency pairs we have. So now the first currency in this pair is called the base currency, while the second one is called the good currency. So take for instance with the first one I called, which is Euro USD. The Euro there is the first currency, while the USD there is the second currency. So the Euro there is the base currency, while the USD there is the good currency. So that's how it is. Now let's talk about why these currencies are traded in pairs. When you talk about exchange, you are talking about giving something to receive something in return. So Forex is traded in pairs because you exchange one currency for another. You cannot trade one currency alone. You are always buying one and selling another one to see which of them is stronger. So that's basically why currencies are traded in pairs. And mind you that Forex is the largest financial market in the world, trading above $6.7 trillion every day. Every single day, $6.7 trillion. So that's massive. That's a very massive market. Now, the next thing we are going to deal with here is how the market works. How do these financial markets work? So in a simple term, the financial market works or moves because there are buyers and sellers in the market. The price moves based on demand and supply. That is, the prices of currencies moves based on demand and supply. When you see red and green candles going up and down in a chart of a particular currency pair, it happens because there are buyers and sellers in the market. So whenever the green candle is the one going up, going up, going up, that means the power of the buyers supersedes the power of the sellers. What of whenever you see the red candle going down, going down? That means the power of the sellers supersedes the power of the buyers. So that's how the financial market works. Now let's talk about those that moves the market. I said that the Forex market is the largest financial market in the world, which trades about $6.7 trillion every single day. So who are those people that are pushing in the money? Is it me and you that have that kind of money to push in the Forex market every day? So now, let's find out who are the market participants, who are the people that are pushing in this money inside the Forex market every single day. So the number one on my list are the banks. The banks are the biggest players in the Forex market. every day they buy and sell huge amount of currencies for themselves and for their customers. So because they trade such large volume of money every day, their actions can cause the price of the market to move up or down. So the banks plays an important role in the forex market. Then the number two on my list are the government. The government can influence the value of their country currencies through economic policies, that is, setting some policies in some certain area. For example, if a government introduces policies that strengthens the economy, that is, investors from maybe other parts of the country may become more interested in that country's currency. So this policy will now cause the value of their currency to rise. Now, the number three on my list are the financial institutions. These financial institutions are large companies that do businesses across different parts of the countries. Imagine a company in the UK that needs to pay a supplier in Japan. So they have to exchange their British pounds for Japanese yen. So when these large companies do these massive scale businesses, it can affect the country prices. So the number four on my list are the hedge funds. Who are these hedge funds? So think of hedge funds as a very large traders with a lot of money. That is a huge trader with a lot of money. They look for opportunities to profit from the market movement and often place a huge trade. So when enough money enters the market from these big players, price moves significantly. So number one I said number one are the banks, then the second one are the government, then the third one are the financial institutions, while the fourth one are the hedge funds. And now finally we have the retail traders. That's the number five on my list. So these retail traders are just me and you. The retail traders, they just make up a very small portion of the overall forex market. So we don't have enough money to move the market ourselves. So our goal is to understand what the big players like the banks, the hedge funds, the financial institutions are doing and try to trade in the same direction with them so that we can make profit off of it. So that's how the retail traders do their thing. Now let's talk about the market sessions. The forex market opens 24 hours in 5 days. That is from Monday till Friday. And these forex markets are traded in sessions. So what are these market sessions? So market sessions are the different times when major forex trading centers around the world are open. Like I said, the forex market is open 24 hours, so it is divided into sessions based on trading hours of particular cities or regions of particular countries or regions, something like that. Now let's go through these market sessions and know the market sessions we have. The number one I have on my list is the Sydney sessions. This Sydney sessions opens around 10 o'clock p.m. and closes around 7 o'clock a.m. GMT plus 1. So this session is usually quiet with very low volatility. That is, the people that are trading that are present in this session, they are very, very low. So the market is moving shabby, like the market is not moving very, very volatile. So that is number one. Then the number two on my list are the Tokyo sessions. So these Tokyo sessions opens by 1 o'clock a.m. and closes by 10 o'clock a.m. GMT plus 1. These market sessions now is a bit more active. That is, more people are now coming inside the market after the Sydney sessions. So this is it. Now the number three on my list is the London session. So this London session open around 9 o'clock a.m. and closes around 6 o'clock p.m. GMT plus 1. So in this session, this is where the market is like getting very active. Like more people are now entering the market. So you see candles going very, very good, going very, very well. So this London session is where more buyers and sellers are in the market. Now, lastly, the number four on my list are the New York session. So this New York session opens by 2 o'clock p.m. and closes by 11 o'clock p.m. GMT plus 1. So this session is very, 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 very active, especially when it overlaps with the London session. That is when they meet together. That is when the market is very, very active. So that's all for the market session. Now let's talk about the tools you need to start forex trading. So if you want to start forex, you don't need expensive gigs, you don't need expensive tools to start. So here is actually what you need to start forex trading. Number one on my list is a trading device. You can have a phone, a tablet, or laptop, or even only a smartphone. Then, whenever you can afford a PC or a tablet, then you can get one of them. Now, the number two on my list is internet connection. You need a very stable internet connection to ensure smooth trade executions without delays. So this one is very, very important. Then the number three on my list is a trading platform. Where do you trade? Where do you place your trade? So this trading platform, you use softwares like MT4 and MT5, MetaTrader 4 or MetaTrader 5, and TradingView. So we use MetaTrader 4 or MetaTrader 5 to place our trade, manage our trade, set our stop loss, set our take profit. Then we use TradingView to do our analysis. Have you seen how it goes now? So we use MT4 or MT5 to place trades while we use TradingView for analysis. So that's basically what we use both of the softwares to do. Now the number four on my list is a broker. So what is a broker? A broker is a company that connects you to the market. They help you to execute your buys and sells in the market. They act as an intermediary between you and the market. With the small amount of money you have as a retail trader, you cannot place trade directly in the dealing desk of Forex. So you have to go through a company that have the capital, that have gone through so many regulations so that they can be able to be a firm that can help you to place trade in the dealing desk. So that's what broker is all about. Now let's talk about the most important one, which is trading knowledge. Trading knowledge. Having a trading knowledge before starting to trade is very, very important. You have to understand how the market works, how to manage your risk. You must have a clear strategy before you can make money from the market. If not, the market will be taken from you instead. So a trading knowledge is very, very important. Very, very important. Now, the last thing on my list for tools on how you can start trading forex is a journal. A trading journal is very, very underrated by so many beginners, but it will help you so much if you have one. It will help you a lot. We use trading journal to record our trades. It helps us to track our performance, identify our mistakes, and helps us to improve the next time. So that's what trading journal helps us to do. It's very, very important. Now, how do you start forex trading? Very important. How do you start? How do you start forex trading? So I have a series of rules, or let me call it ways you can follow to start forex trading. So number one on my list is get a mentor. Get a mentor. Get a mentor. This one is very, very important. So the fastest way to start forex trading correctly is by learning from someone who already understands the market. So a mentor helps you to avoid all these costly beginners mistakes. In forex market, every single mistake you make, you must pay with your money. So they help you to understand the market structure, they help you to understand the risk management, and helps you to understand your psychology very early. So he will now teach you a proven strategy that will help you to make money from the market. So I strongly recommend you to get a mentor. Pay the person to teach you, because if you don't want to pay a mentor to teach you, there is high chance you will lose more than times 10 of the amount you're supposed to pay the mentor before you even start to understand anything about how the market works. But if you don't have money to get one, just find something doing, find a work, find a job, then get money from it, then pay a mentor, and the mentor will now teach you how to trade. Now, the second way you can start trading forex is by learning and practice every day. What you should know about forex is that forex is a skill, and the skill grows through repetition. That is what you are doing consistently what you are doing every day, every day. You see your mistakes, you see what you avoid. So the skill will grow through repetition, and it will grow by learning and practicing every day. So you have to study the market every day, review the charts, watch price behavior, and practice what you learn consistently. Even studying 1 or 2 hours a day will compound to a strong experience over time. So learn and practice every day. That is number two. Then number three is to create a plan. Every trader that wants to be consistently profitable must have a trading plan. Your plan should consist of when to trade, what to trade, that is the currency pair to trade or the instrument to trade, your risk per trade, that is what you risk in each trade. Then it will also consist of what you will see in the market before you can enter a trade, and also where you will exit your trade if you are in a trade. So these plans act as a guidance to you, and it will help you to make good decisions in the market. So they are very, very important. They are very, very important. So the next one I'm going to talk about is open a demo account. Although demo account will not help you a lot, but it will help you to master some of the apps that you are going to use. Use demo account to practice your strategy, then use it to master your MT5, your trading view, and all that stuff. Then once you master them, you can now move over to small little live account, and you can practice from there. So the number 5 on my list is for you to choose a reliable broker. I've explained broker previously, so pick a broker that is regulated, that has low spreads and fast execution, that also has a good platform, that is a simple platform that you can operate easily. So your broker is your bridge to the market. That is, they act as an intermediary between you and the market. So if you are choosing a broker, choose wisely. Make important research before you choose any broker. And finally, on my list is start small on a live account. Just deposit small money on a live account. So when you go live, make sure you trade small lot sizes. Just focus on consistency, not profit. Then manage your risk very well. The goal is survival and skill building, not getting rich fast. So when you gather all these things, now the profit follows. So follow all the steps I mentioned in this place. It's going to help you a lot if you want to start forex trading. Now let's talk about the common mistakes you must avoid if you want to succeed in forex trading. The number one on my list is don't ever borrow to trade. Don't you ever try that. Don't you ever try that. It's going to break you down. This is very, very important. Don't ever borrow to trade, because if you try to borrow to trade, you will cry if you do. You will think that you have learned everything. When you start forex or you learn 1 or 2 strategy, you think that you have learned everything. It's just capital that is holding you to make a big money. When you collect that money, you will cry because you will lose everything. So don't ever borrow to trade. Then number 2 on my list on the mistakes you must avoid if you want to succeed in forex is trading without a plan. You must trade with a plan. Plan your trades, trade your plan. That is very, very important. If you don't plan, if you just walk up to the market randomly and start placing buy or sell, you are just gambling and you will lose a lot of money. So plan your trade and trade your plan. Like take for instance, if you want to start trading on Monday, you have to prepare on Sunday first. Then after trading on Monday, and Monday night, you journal your trades, then know the mistakes you've made and where to improve. That's how to succeed in this forex trading. Then the third one is don't revenge trade. Revenge trading simply means maybe when you enter a trade, then you lose that trade, then you want to enter another one immediately just to recover the profits you've lost. That is very dangerous. You are going to lose everything if you try that, because your psychology, your mindset is not stable at that moment. You will not be making the right decision at that moment because you want a revenge. So it's very, very dangerous. Don't revenge trade. Then the number 4 on my list is avoid overtrading. Overtrading is when you are placing a lot of trades every day. That is very, very dangerous. Just pick the A plus setups, place them, have patience, wait for them to appear. Once they appear, you strike, you make money, then you sit back. That's how to make money in trading. Now, the number 5 on my list is don't risk too much per trade. Here you are working with probabilities. You don't know what will happen in the market. So always manage your risk so that you can survive in the market. And finally, very, very important, don't expect fast money. It's when you have built your skill, then the money will start flowing little by little. So that's how Forex works. So if you are serious about Forex trading, just understand this. Forex is just a skill. And you know that a skill takes time to master. So if you stay consistent, disciplined, and patient enough to wait for the A plus setups to show, then the market will reward you bountifully. So thank you for watching. Subscribe to this channel and see you next time.